Hello everybody, in this video I'm going to be doing a brief stock analysis for JetBlue. This is not going to be any kind of deep dive into the financials, but more so me just giving up my opinion on the company as well as the airline industry. I like to start off by taking a look at the 5-year chart, just so you can get a little bit of a better long-term growth perspective for the company. And it's not a pretty sight here. You can see at their previous high before COVID hit, they were still down about 15% for the last 5 years. And if you do look just before their previous high, they were down below 20%. Now, taking a look at the stock year to date, you can see they're at about $22, previous high as we saw, and then they dipped all the way down to below $7. So the stock price went to about a third of its previous high, which is pretty insane. And then the stock has slowly recovered since then. But the stock has also been really volatile again in the last couple of weeks, as there's been a lot of talk of a second wave of this thing hitting. And then if we take a look at their revenue and earnings year over year, we can see that revenue increased year over year, which is great, but it's not necessarily good that earnings were less in 2018 and 2019 than they were in 2016 and 2017, which definitely raises some questions. And then if we start to take a look at their last few quarters, we start to see some serious problems, understandably, because this thing hit in March, right at the end of their quarter 1 close, and they already saw negative earnings and a massive decrease in revenue as a result of that. And then in quarter 2, when this thing was really, really serious, very, very few people were flying other than those that needed to out of necessity for one reason or another. And then in quarter 3, actually seeing another dip in earnings, even though revenue increased, and I think that's probably what we're going to see in quarter 4 as well. Before continuing, I did want to point out something that they differentiates JetBlue from some of the other airlines. It's that they really do care about their service on their planes. Something that kind of goes along with that is that they have free snacks on their planes, and you can have as many snacks as you want, which really shows how well they want to treat their customers. And they have better cancellation policies as well as free bags, and those things all together can create a lot of loyalty among customers. And even though sometimes you do have to pay a little bit more for the tickets, that can still go a really long way. Next up, I'm going to talk about a few points by the Bears and the Bulls from analysts at Morningstar. The first point is that they have a really strong and experienced management team that come from other low-cost airlines. And as all of the airlines are kind of in bidding wars right now, I'm sure that's definitely going to help JetBlue if their management team has a lot of expertise in that area. And then the next point is that they're using an algorithm for their competitive pricing, which could help them increase their revenue from their transatlantic routes, which I think just started recently, within the last year, actually. And then the last point actually kind of surprised me is that 40% of JetBlue's business is out of the New York metropolitan area. That's not what surprised me. What surprised me is that the pricing there has been more resilient than other areas in the market. I would think the New York metropolitan area would be kind of dead right now, nobody really wanting to fly in there, but I guess there's still a lot of international travel taking place, and pricing has been resilient. There's not a huge decrease in demand or price in New York, even though it's been a COVID hotspot since the beginning. But the city is having a lot of trouble aside from COVID and has been for the last several months, so it will kind of remain to be seen if that will have any kind of lingering effects that could negatively affect the metropolitan area for airlines. And next up, I'm going to take a look at a few bearish points. The first one is that they have a substantial fixed operating cost, which we kind of already saw when we were taking a look at their revenue and earnings. Even though revenue was shrinking big time, earnings were decreasing even more, and that's because of their fixed costs. Even though revenue is decreasing, you'd think their costs were going to go down, and they do to a certain degree, but they have massive fixed costs, which means even if there's fewer flights, they're still going to have to pay no matter what. And then the next point is that if there's an increase in competition for joint ventures among the other airlines, then they won't be able to add capacity to those Europe to US and US to Europe flights, which will ultimately hurt their revenues in the long run. And then I'm actually not exactly sure what this last point is getting at, is that the firm's business model depends on high utilization, making them vulnerable to congestion and adverse weather. I take high utilization to mean credit rating financial trouble, so not exactly sure what that point is meaning, but be sure to let me know down below if you do. And then lastly, I just wanted to take a look at their research report overview from Morningstar. And this is actually only a partial research report overview. Normally there's 5 things on here, but this is missing the fair value and the Morningstar rating, which I've never seen before. So that's a little bit curious. But what it does say is that they have no economic moat, which is somewhat fair. They do have a really strong, well-developed brand, but other than that, they don't have any kind of patents or anything like that. Uncertainty very high, which is true for all of the airline stocks right now. And then stewardship standard, I really don't know much about their top management, so that's definitely fair. But just based off the fact that they gave no economic moat and uncertainty is very high, I would say this probably has a low Morningstar rating, especially with the fair value not likely being much higher than $20 just because of the outstanding debt right now, as well as the looming second wave of COVID. I do make a ton of other bereaved stock analysis videos on my channel, so be sure to come and check it out. Like and subscribe for more content, and thank you so much for watching to the very end.